So welcome, everybody. And we've got quite a few new members, so it might be, I think we will be worth quickly to go around the room to say, if you could introduce yourself, where you come from in the world, and also what organization your day job is with, or what you're doing. That would be great. So if we could start with the people that are completely new to the PAG. So Umu, if you would like to start.
Okay, so my name is Umu Wan Toure, and I'm a chartered accountant in Senegal, West Africa. So I had an accounting and audit firm named MECA, Management Expertise Comptable and Audit. And I'm also chair of the standard committee for the Senegal chapter. Okay, thank you.
Thank you, Umu. Then if we turn to Nigel.
It's a pleasure and a privilege to join your colleagues. Nigel Davis from the UK. Having stepped down from being an assistant director at the Charity Commission, I'm a chartered accountant, chartered certified accountant, I should say, and I'm doing consultancy, looking to work with small and medium-sized MPOs. Thank you, Tim.
Thanks, Nigel. Baggers, I think you're the next new member. And you're muted right now, Baggers.
Hello, yes, regards from Jerusalem. I am Baggers Petro, CBA, CMA, CFM, CISA, CFE, also practicing. I have my audit firm. I have 20 years of assurance services with Big Four, in addition to international experience with mainly accounting standards into SAI, ESAI, and IFRS. I have my audit and consultancy firm in terms of accounting, forensic, IT audit, assurance, a little bit assurance became an old school somehow. However, yes, I am glad to join this group. I have also have intensive experience with NGOs and projects because I worked in the Middle East, Palestine, Jordan, Gaza, Israel as well. I have experience in Africa as well, East Timor. Yes, this is briefly. I will be glad to have my insights and input to add value for this great project.
Great, thank you, Baggers, and welcome to all our new members of the PAG. If the existing members could quickly also introduce themselves, so starting with Paul, please.
I'm Paul Mason. I'm consultant currently working with SIPFA as one of my projects on this project. I was previously assistant director with SIPFA on local government accounting, and after that, I was a staff member at the IPSASB.
Yeah, I've confused the proceedings here by getting Paul to introduce. Yes, he's part more of the secretariat. My apologies for that. So actually, I should have turned to Dorothea next.
Thank you. Hi, everyone. I'm Dorothea Malloy. I'm with USAID. I'm the senior advisor to the chief financial officer for USAID. And I've also stepped into the role of an acting division chief for our overseas division, which is coordinating with all of our controllers worldwide. I'm a certified public accountant, and I'm also a chartered public financial accountant in the UK. So nice to be with you today. Over.
Thanks, Dorothea. And finally, Kenneth. Can we hear you, Kenneth?
Yes, Tim. Kenneth Makanga is my name. I'm based in Uganda and I'm a Ugandan. My full-time job, I'm a parent and a husband. I part-time with BDO as a partner, and I've been with PAG since last year. Nice meeting you.
Thanks, Kenneth. I love that. And then we're just being joined by David, who's connecting still to the audio. So, and then what I'll do is we'll have the secretariat introduce themselves as they kind of get into it, because we've got so much to get through today. But I should introduce myself. I'm Tim Boyce Watson. My day job is working with Humentum. I'm the Global Director for Influence and Initiatives at Humentum. And my role on the PAG is to be the chair. So to keep us all moving through the agenda and to make sure that you can all contribute is my main objective. And we'll get started in just a second. I wanted just to say that the PAG is shifting in its role, in the sense that we're now, because we're out of the consultation phase and into the drafting phase, the way that the PAG will be contributing is going to be a bit different from how it was in the consultation phase. And in general, we will meet before the technical advisory group, and the technical advisory group is really throwing us questions in partnership with the secretariat that they really want us to input on ahead of those meetings. So in some ways, we're going to have to work harder in this phase than we worked in the consultation phase. And you'll see there's quite a few meetings be coming into your diaries. And as part of that, we are bringing new members into the PAG, and it's hugely encouraging. We've gone out and asked quite a few people based on recommendations and so on. We've had a fantastic response, so many people joining the PAG. So you're going to meet new members over the coming months as they get involved. Great. And we've just got David. David, just say quickly who you are, because we've got a few members and it'd be great just for them to know where you're coming from. And then Jenny.
Certainly, David Gilchrist from Australia. Apologies for coming in late, technical difficulties, but very happy to be here. Thank you.
Great. Jenny?
Hello, hi everybody. Again, also apologies for coming in late, but I was on the Teams link, not on the Zoom link, so that will teach me not to read my emails more clearly. Really nice to meet you all. I'm Jenny Kiff. I'm the CFO for the Oxford University Clinical Research Unit, based here in Vietnam, Indonesia and Nepal. And I'm also one of the co-leads on the Good Financial Grant Practice, which is an international standard for good financial practice.
Great,
Very pleased to see you all.
Thanks, Jenny. And then Sis Wheelie.
Good afternoon, everyone. Maybe it's good morning for some, I'm not sure, but happy to meet all the new members. I'm Sizwile Sibindi. I'm based in Pretoria. I'm currently working with Chemonics as an Ops and Finance Director, and I'm transitioning actually to another organization in the next 2 weeks in Nairobi, Kenya. I'll be working with Financing Alliance for Health as Head of Ops and Risk. Thank you.
Great. And we're just being joined by Karina as well. So that's good. Karina, can you hear us yet?
Yes, thank you. And hi, it's nice to see everyone.
And Karina, we've just done introductions. So could you briefly introduce yourself?
Yes, my name is Karina Bartanova. I've spent more than 20 years in the public accounting and the Chartered Certified Accountant UK. And I have the pleasure to participate in this project now. It's been 2 years. It's some time. And actively participated in the Practitioner Advisory Panel for the consultation paper, and ever since. And had the honor also to represent the project for Russia, my compatriots. I know it's not a popular country at the moment, but nevertheless, trying to onboard them and to give their feedback.
Thanks, Karina. And your day job is with the World Council of Churches now.
Yes, I'm with the faith-based organization.
Great. So thank you. And it's really great that we're all assembled. I'm going to hand over now. We're going to have time for each of the papers, and each of them will be presented by a different member of the Secretariat. So Phil Trotter is going to get us started looking at narrative reporting.
Thanks, Tim. Hi, everyone. I'm Philip Trotter. I'm an independent consultant working with CIPFA as an associate. My professional background is I trained with PwC in the UK, spent some time with PwC in Europe and North America, then went to HM Treasury to work in UK central government, and then spent some time with Deloitte as well. And I've been working on the project now for around 2.5 years, I believe. Time is limited, so that's the end of my brief introduction on myself, and the paper's introduction is also going to be quite brief. So the consultation paper proposed that the guidance would include non-financial reporting information, also known as narrative reporting. In part 1, respondents were supportive of the inclusion of non-financial information reporting, but did raise some conceptual and practical issues with its implementation. And in part 2 of the consultation paper, respondents supported the description of the issue and the need to propose a common approach based on an overarching framework and high-level principles, but they were split as to which of the alternatives they supported. So our first question for PAG members is around the responses to part 1. And in particular, would appreciate your views on any specific difficulties you think NPOs may face around collecting, verifying and reporting non-financial data, assuring that data, and quite crucially, ensuring that non-financial information reporting is fair and balanced. And I will hand back to you, Tim.
Great, thank you, Philip. So the custom we have, especially for new members, is the best thing to do is to use the electronic yellow hand, which you can get to through the reactions button at the bottom of the screen. If you're really struggling, you can use, and you've got a video, you can use a conventional hand as well to signal that you want to come in. And I will try and take you in the order that you bring up your hands. That's my role as chair. So David is the first one with the hand up. So David, please.
Thanks very much. I wanted to just make 3 comments that I think that are really important from an Australian perspective. Our research keeps showing up that costs associated with investment to be able to undertake commentary is a really significant issue for Australian not-for-profits and charities. That the analysis of data is also a significant issue, that in other words, having the skills and capacity to be able to collect the data, to be able to analyse it and then report on it effectively. And the cost of auditing and assurance over that data is also a significant impost. In the Australian context, that auditing impost or that auditing challenge becomes even more substantial as we've come to recognise auditors don't know as much about the charities and not-for-profit sector as we might like, but also the opportunity to assure non-financial information is an increasing challenge for auditors because there's much more to this issue than just simply whether the commentary is right or not. So that's the first point. The second point I just wanted to raise in regard to systems and training and the discussion of this particular topic, I think it'd be really useful to have a set of definitions outlining what it is we're actually talking about. So again, in the Australian context and in New Zealand and elsewhere, where I've had these discussions, people are talking about different things because we have commentary relating to performance reporting, things like, gosh, I'm just trying to think now, outcomes reporting, all of those kinds of things seem to get sucked into the one discussion. And of course, they mean different things to different people and have different impacts in terms of what information's provided and how that's provided. The third element relates to the timing of information for many not-for-profits, which are primarily focused on significant service delivery areas in human services, such as disability services, child protection, and so on. And of course, from a reporting perspective, as accountants, we're used to the 12-month annual report process, whereas a lot of these programs, a lot of our research is showing up, these programs simply there's no sensical information that can be provided often in the first year or the first couple of years. And sometimes it can be 5 years before we're seeing information that's of value. So I think there's also a temporal issue that becomes important for reporting effectively in this area. And then the final point, I promise, is that there is some positive about this. Our research has shown up quite significantly. And I think this is important, even though we're talking about external reporting, all of the stakeholders that we've been interviewing and talking to in this particular space identified that this process is incredibly valuable internally in terms of seeing service improvement, informing strategic planning, informing service mix, as well as human resources management and human resources performance assessment. So I know that's an internal issue, but I think there's got to be we've got to keep communicating to the sector about the positives to this kind of process. So they were my comments on that. Thank you.
Thank you, David. Anybody else want to come in? I think you actually covered a lot of the tensions between around this topic in your, so that's fine. I don't want, oh, Nigel, yes, please.
Yeah, it's just stimulated by what you said there, David. Narrative reporting, particularly this topic of performance reporting from a former regulator's perspective, is at the heart of not-for-profits showing the difference they make. And that's often what funders and donors are, according to our research anyway, very concerned about. So it's key, really. And I think facing some of the assurance issues that you rightly raise, perhaps having high-level indicators that link to the natural way in which business is done by the not-for-profit is the best way of overcoming some of these practical issues, because the reporting resonates with the organization, is therefore more natural to it. But that will lead to a diversity of potentially reporting metrics. And one of the things, just to conclude my comment, Principles into Practice, which is a charity finance group initiative of about 2016, I think, might be a little earlier, looked at how to make this practical and realized that you need a range of metrics. And I think that's the challenge to a degree. When you stray into this area, it will inevitably become a bit more bespoke, and that'll be a challenge for donors and funders, but perhaps a creative one. Thanks.
Thanks, Nigel. Cecilia.
Thank you, Tim. So I think that it will be important for nonprofits to understand why they are being asked maybe to do this type of reporting, because I think sometimes as nonprofits, not to be cynical, but sometimes as nonprofits, we just want to speak the donor language. So we will just write what the donor wants to hear without really, articulating what we would have wanted to articulate. So maybe if they understand that this is not meant to be punitive, but it's really meant just for pure reporting purposes, I think that that will be great. So whatever information they are collecting and reporting on, they know that it's not meant to be a tool to judge them maybe negatively. Then they don't just speak just the language that the donors wanted to hear. Yeah, thank you.
Thank you, Umu, and then we'll come to Sam.
Okay, thank you. So I just wanted to point out also that it's very important for non-profits financial statements to be accompanied by narrative reporting. It's very important. And but by reading the paper, I see that it's I would go like for prescription and flexibility. So have some guidance on general lines to be general data or explanations to be given, and also freedom to add specific information for your internal use by governance structure, governance bodies, and also for the donor narrative information for donors also. And so to really have some relevant information to go with the financial statements. Yeah. Thank you.
Thank you, Umu. So I think inevitably we started straying into answering question 2 on the paper as well. So I'll turn to Sam now, and maybe Sam, because we've got so much to get through. We'll also start looking at question 2 now. So because I think you've got some input from both Carolyn and the donor reference group that are relevant to question 2.
That's right. So Carolyn is a member from New Zealand. It's midnight there, and she begged to be let off the physical meeting, but she put in some comments. She referenced one of the standards from the New Zealand, which has a performance reporting standard. She says it's principles-based, and that they moved away from outputs and outcomes to allow for different understandings of these terms. So I think she's just encouraging us to look at that. Then she also mentioned that she thought that reporting on inputs wouldn't be useful. So reporting on what, things like in kind, things that are in kind might be reported anyway when we look at incoming resources, but otherwise a focus on outputs, outcomes, and that kind of aspect would be more appropriate. On the DRG, as you would have seen from the report, we did a discussion about donors as users of general purpose financial reports, and we asked them what they would like to see. The highlights, there's a lot there, but the high level things that they focused on was information about governance and details of boards of directors in the narrative report, information about strategies, goals, plans, and risks, information about activities, geographical spread and achievements, and then a few about legal status and registration, that those information be useful. Obviously, people are more interested in saying what they do want to read rather than what they would want left out, and we have this succinctness challenge. So, but that was the input from the DRG. Thank you.
Great. So I'm kind of reopening the floor now to really question 2, which was, to what extent do you believe the approach that's outlined is going to meet users' needs? So is there anybody else wanting to say anything on this topic? Or I think quite a lot of you wrapped it into your first round of comments that spoke. Jenny.
I agree completely with everything that's been said earlier about, you know, the challenges and things like that. But having been at the end of having to do one of these myself for the first time, actually guidance and examples and helps and as much guidance that you can give actually would be really, really useful for people, because, you know, when the standard comes out, actually people are going to really struggle with this. You know, if they're doing it for the first time, there'll be those that can do it easily, that are used to this, but the majority, I reckon, will struggle with it. And I think having really clear guidance and examples, but leaving the flexibility there as well, would be really useful. And I take the point about the auditors too. You know, the people that are auditing this, and I've experienced this as well, is these are financial auditors, and they can be quite challenging, if you like. When they're auditing this kind of information. And so I think whatever you develop, some really, really strong guidance and examples so that people can really see, oh yeah, that's what they want. Because I think that's what the thing that people will ask is, what do you want from this? And if we're not clear in this, it's going to make it really difficult. Thank you.
Great. So we've a great number of hands up here. So we're going to go Nigel next, or I'll just work out the order. I just need to write that down. Nigel.
Thanks, Tim. I was just going to say, colleagues, one of the things that research for the regulators have identified is values. Not-for-profits living their values, in this case, charities. And that was the one dimension I felt perhaps didn't come through clearly enough. And it's a distinctive from both the for-profit sector, which is cash flow driven, and taxpayer accountability, IPSAS. And I think drawing that out a bit more about the purpose of the non-profit is an important element and shouldn't be neglected. Thank you.
Great, and we'll go to Baggers next.
Yes, to the point, I think maybe the cross-cultural differences, especially
we'll come back to Baggers in a second because I think his audio's cut out. So David,
compliance with law enforcement.
Baggers, we're just losing you. I'm sorry. I'll come back to you after. Let's let David and Karina come in, and I'll try and come back to you at the end because we can't hear you. David.
Thank you, Tim. I just wanted to reinforce, I think having as much explication and examples as possible is a really important point. I think the second point, my experience in this part of the world is that as much as we talk about having a principles-based set of standards, auditors and the audit process and the reporting, and I guess accountants generally, the process ends up being tick the box process if you're not careful. And I think that's really important. I think the third thing is that in that explication and examples, it'd be great to see what bad information looks like or what risks to information there might be. For instance, where you're providing services that support children or provide child protection or what have you, how do you work out whether or not they're actually achieving the outcomes that they need to achieve or want to achieve or what have you? There's some real significant issues around some of those things. So I know the standard can't cover off everything, but if it identified risks, then people can go off, can at least go off and look at that. Thank you.
Great, Corinna, and then we'll come back to Bagas, who looks like he's got a connection better now.
Thank you, Tim. I agree with everything was just said, and also what David has underlined. Explanations are key, and when I read, in fact, all the elements, they look fine. Some of them definitely would require adaptation more towards the charities and the NGOs language, because when you read this NGO goods and service performance objectives, it could be taken from anywhere. It could be, it is a very commercial, if you will, language that is used. I would like to see more of mission type of the performance indicators that are more linked to the sector. It's not to me enough sectorized. This is quite generic at this stage of the project, of the process. But overall, all of them are good. And I believe from experience, this right here from the Swiss and the international NGOs would struggle more with the performance indicators and the key success factors, because it can be very diverse. In terms of guidance, it will be a complex area to address, so it needs to be sufficiently flexible.
Thanks, Corinna. And Bagas, we'll try and come back to you now. Hopefully you can make your points.
To the point, I think the concept of management discussion and analysis, somehow it's a private business or commercial, but from my background, I think it's like thought or concept that deserve taking directors of the General Assembly here. Yes, that's it.
Thanks, but what we'll do, Bagas, if we didn't get everything, we'll come back to you after the meeting just to make sure that we've got your points there. I turned your video off just in case it helped your audio, so sorry if that was a bit of a surprise. Great, so I think that's a good round of input. Oh, Dorothea, I'm going to let you sneak in. Final point.
Sure, and just real quick, and it's more of a question whether this information would be helpful for me to pass on after the meeting. You may be aware, so I'm just highlighting it. Our agency, USAID, produces a financial report, and that includes all of this management discussion and analysis. That's the formal section of our agency financial report that goes with our financial statements. Well, over the years, these management discussion analysis sections have just morphed into pages and pages and pages. Everybody just piles on. There's currently a project with the Federal Accounting Standard Advisory Board to get a hold of this section and to provide guidance to the USG-wide for any agency that does these reports, which are all of them, to say this is what should be included in this management discussion and analysis section, essentially a narrative reporting. So I'm just offering that for information. Please disregard if you've already seen the FASAB material, because they're going through consultation now in a project, but they're having some type of guidance set out how to essentially do this type of narrative reporting for USG agencies to go along with their financial statements. So I just offer that as a point. And again, please disregard if you're already aware of that. Over.
Great. Thanks, Dorothea. So that's great. It's a really good range of input on question 2. So turning to question 3, and we're going to have to be really tight here on time because we've got 2 more papers to go through. Really want to get, you can possibly use the chat about how much of a priority should there be to bring in sustainability reporting into what we're doing. So I'll just open the floor if anybody wants to speak to this, but if you could signal where you lie in terms of, do you really think sustainability reporting should be in, or do you think it's optional? In the chat as well. So, but I'll invite Nigel and Dorothy, has you got your hand up for this item as well? No. So Nigel and David to speak to this, but please also use the chat.
Thanks, Tim. Very briefly, the IFSP have produced a very thoughtful overarching approach, which is 4 elements, which are to do with governance, strategy, risks, and metrics. And that might be afford a way of doing this in a very proportionate way. It's a breaking news with COP26. I don't think the for-profit sector, with embracing it, we as not-for-profit should ignore it. So it should be an ingredient, but a natural ingredient rather than a whole new framework. Thanks.
David?
I need to agree with Nigel there. I think this is an important issue, but to my mind, there's a hierarchy of issues, and getting the reporting right in the first instance is probably the most important thing, and then having a longer time frame to look at some of these other issues as things develop.
Great, so please, and I see some good comments coming into the chat, so continue to do that. Well, we'll move now, and thank you very much for the input on that one, to looking at the financial statements presentation, which is going to be introduced by Paul.
Thanks, Tim. I'm just going to share some slides very quickly. So in this session, we've got 4 questions. Name to be used for the statement of financial performance, practicalities of separate presentation of restricted and unrestricted funds, advantages of an approach that allows deferral of revenue, and then proposals for an optional donor or project statement. So the name of the financial statement, financial performance, we proposed that statement, so name of statement of financial performance in the consultation paper. Approximately 2/3 of those responses that commented on that question supported the term. However, a number of respondents gave reasons for not supporting it, particularly NPO's performance, not judged on whether they make surpluses or deficits, and income and expenses may not align in the same way as a commercial organisation. Alternatives proposed are a number, but particularly statement of income and expenses or statement of financial activities. There may be some issues using statement of financial activities as it's used in the UK charities SORP with specific format, and if we have something different, it may be confusing to have 2 statements with the same name but different formats. So just looking for the PAG's views on the name to be used for that statement in the guidance, because we do appreciate it's likely that some jurisdictions will specify that a different term has to be used when NPOs are producing their financial statements.
Great, thank you, Paul. So Sam's just going to drop in the chat a few of the names that are kind of under discussion. Would anybody has anybody got a strong view about any of these names? And this is the time for you to put forward that view. Umu and Jenny. So Umu first, please.
Sorry, I was on mute. Okay, so for first about the name of the statement, I would go for statement of income and expenses, because for non-profits it would be maybe just difficult to judge on the performance just with surplus or deficit. It would be too restricted to just performance, financial performance based on that. All the more than as we just discussed as a sustainability issue of nonprofits, especially in the African zone. We have very great problems with NPOs financial sustainability. And so I will just continue now on like the three figures that would be good to see in the financial statements is, I would say, like a surplus, restricted and unrestricted, so that by analyzing, and the third one would be the reserves. That would show, I mean, for the year, how the, I mean, the performance, if you can say, on that side was achieved, and also to see if the NPO has like some reserves to ensure financial sustainability. And just to finish, in terms of financial statements, I mean, globally, it would be, I would go for like general purpose financial statements plus additional optional donor specific statements. Yeah, to finish. Thank you.
Great, thanks, Umu. And you've given answers across the questions, which is going to help us in a moment. Jenny, is your hand deliberately gone down, or were you still wanting to come in?
I just put my hand down because I wrote it all in the chat, which is I really vote for keeping it simple and making it globally recognized. You know, I think, to be quite frank, I think this statement, the statement of financial activities is too open to interpretation. So I'd vote for simplicity. Thank you.
Great. David.
The only comment that I would make is in the use of the term surplus and deficit, where we still have quite a significant mythology, I call it, around the charities and not-for-profit sector in this part of the world, where people just don't believe charities and not-for-profits have to break even or make money in order to survive in a market economy. And so my preference is to use profit and loss. I'm on a very losing battle there, I appreciate and understand, but the use of the term surplus and deficit completely misguides people that don't understand the sector but still commentate on the sector.
Great, thanks for getting some more controversy into the meeting, David. Appreciate it. Kenneth.
Thanks, Tim. I think I'll be speaking more from a layman's perspective, and I agree with the previous presenter. I think it's important we keep this simple. If we say statement of income and expenses, I'll be speaking on behalf of the many Ugandans. I think many will relate to what exactly this statement is presenting than if you use any other terms, because I think we all agree that the elements that make that element just income and expenses. So I would say I have a strong opinion that it will be fair to keep it statement of income and expenses. Thank you.
Karina.
In fact, I listed already my preference for simplicity, so I agree with all the respondents that voted for simplicity and income and expenses. Just to respond to David, I do agree that there is a lot of misconception regarding surplus, deficit, current profit or loss, but I think that considering our engaged stakeholders, it will be complicated to pass this profit or loss, because many of them themselves will resist. I expect some resistance if we try to endorse them. Profit or loss. They prefer definitely surplus or deficit.
And Nigel.
I was going to say, I appreciate the point David's making about profit and loss, but I think the difficulty is that profit is normally remitted for private benefit of stake providers of capital, and that will inadvertently perhaps create misconceptions that not-for-profits are really the same as for-profit companies. And in the UK company account, UK Ireland, we use income and expenditure account for non-profits reporting on the company law that aren't otherwise governed by another framework. So I would stick with income and expenses as being probably the one that will resonate easiest, even though arguably it doesn't treat gains that easily within that framework.
Great, so thank you very much. What I'm going to do is move us on, I'm going to remind you, sorry, I've got a bit of background noise here. I hope you can hear me fine. It's fortunately in this group, it's not my job as chair to force us to reach consensus. That's Ian Carruthers' job in the technical advisory group. So what I'm really trying to do is look for I'm interested in the diversity of opinion. We're interested in the spread of opinion. So that's important for us always to bear in mind in our discussions. So just before we leave this item, Sam's going to drop that in again. If you can signal which one you prefer out of those options in the chat by just using the number 1, 2, or 3, that gives us another kind of record that we can go back to. It's not a binding vote. It won't bind the tag in any way. It's just that we can give a sense of where the distribution is amongst us as a PAG. Great, so we'll turn now to the question 2. Paul, do you want to just quickly set it up?
Thanks, Tim. Yep. So question 2, looking at restricted and unrestricted funds. So looking at fund accounting, which distinguishes between restricted and unrestricted funds, reporting income and expenses for each separately. It's similar to project accounting, but some differences. And again, similar to deferred revenue, but differences. So just some examples. If you had full fund accounting, you would report each restricted fund separately, then unrestricted funds and your total. What we're proposing is that we have simply 2 columns, one for restricted funds, one for unrestricted funds. And just to show the differences with project accounting, you can see for projects, you may also have funding from general reserves, as well as sort of donations to restricted funds. So again, there are those subtle differences. So what we're just looking for is, does the PAG consider that the proposal to show restricted and unrestricted funds is practical, useful for users?
Great, and we are under pressure of time. So what I would like to hear most of people that are against this, and we really like to hear from people that are against the idea of using restricted and unrestricted first, if that's so. If that's you, this is a good moment for you to speak. Sam.
I'm not against the concept, but I have heard people saying that the terms restricted and unrestricted are not self-explanatory to a majority of users. So the concept, I think, is generally welcomed, but the terms maybe might need some thinking.
And Baggers?
I am with mentioning restriction and unrestriction, but with the possibility to add third or other column, because here, for example, when we have multi-currency, we used to add it in a separate place because no one likes to bear the risk of difference of currency, for example. As a result, it should be mandatory, those 2 restricted and unrestricted, but with optional to add other columns. That's it.
Thanks, Baggers. That's interesting. And later in the development process, we'll be returned to this issue of foreign exchange. So it's good to get some ideas in around that now. Good. So I think Ulu, please.
Yes, just to add to Baggers' proposition. In fact, I would go for keep the 2 columns for the financial statements, and the narrative, or the notes, whatever, guidance should provide any details that relates to these columns, like for donor project reporting, whatever, and exchange, whatever. So that would be in the narrative. Okay.
Jenny.
You're muted. Talking to myself because I think thank you, Sam. I think I might be in a minority of one, but I don't really like seeing the restricted and unrestricted on the face of the accounts. I think it detracts from the overall thing, and I think there's other ways of showing what's restricted and unrestricted. And you don't see sort of the equivalent sort of in profit companies when they've got segregated accounts and all that kind of stuff. So I must admit, as a reader of the accounts, I'm not a big fan of it. I'd go for simplicity in that front, and I don't know why we pick on the charity sector on this in this way. But that was just my own personal view.
Thanks, Jenny. David.
Just following up on Jenny's comment, our research shows that people simply don't read the notes to the account. So we've had a number of research pieces, not just our research, but others identifying that. And so the face of the statement seems logical to my mind to at least have restricted income demonstrated. So I don't know that it's so important to have restricted expenses, so to speak, allocated against that income. I think that can be taken up consolidated, but to have the restricted income exempted or separated rather on the face of the statement certainly had some support in our part of the world.
Great. Thank you. So I think, once again, I can see the Secretariat dealing with a good diversity of views, which that's part of what we're here for, right? Is to really represent that diversity. So that's great. Let's turn now. I think Baggers, I'm hoping that was an old hand. If not, come in and interrupt me. Let's turn now to this matching question. So Paul, again, if you could just set up the question.
So this is a question about matching, looking at deferred revenue. So under that model, revenue is recognized in the same period as the related expenses. So that gives you greater matching of revenue and expenses. That's the case whether or not donors impose restrictions on the use of funds, which means in some cases that deferred revenue will not meet the definition of a liability, so it won't meet the concepts on which we're basing the guidance. One of the options in the consultation paper had this deferred revenue model, but did not receive significant support. I think it was around about 12% of those who responded on that question. Just to look at what the different options would be. So if you had, first of all, a liability model and there was no conditions, so donors didn't impose any conditions, you're only deferring if there was a liability, then as soon as you received a donation, you would recognize income. If there were conditions using a liability model restrictions, then you would recognize liability. And under a deferred revenue model, you would defer it because there'd be no expenses. And then in the first year, when you had your expenses of 6,000, in this example, no income to recognize under the no conditions model, you've already recognized everything. Under the liability model, it would be a question of whether or not you'd satisfy the liability. In most cases, you would satisfy the liability over time, I would think. And so you'd recognize 6,000 income in that year, but it may be zero if you only meet the conditions at the end of the project. Under the deferred revenue model, it would be 6,000 because that would match your expenses. And then in year two, 4,000 expenses, no income under where there's no conditions. You've already recognized everything. Either the full amount or the remaining amount under the liability model where there are conditions, and the amount to match the expenses under the deferred revenue model. So we're seeking the PAG's view on the advantages and disadvantages of using matching for revenue to expenses, even when there are no restrictions, and asking what information would be useful for users under deferred revenue.
Thanks, Paul. And Sam, can I invite you just to represent Carolyn's views, because I think we got some in advance on this.
Yes, so Karen's views were that the general deferral, no, not right now. Sorry, I need to check it. I'll come back in a minute.
Okay, it's all right. Kenneth.
Yes, thanks, Tim. I think one quick disadvantage which I can share with you from our part of the world is that if there's no deferral model, you might end up with a surplus or deficit. And the taxman in Uganda here has defined really charitable entities as not taxable. But when entities go in and try to apply for that and you have not applied a deferral model, you have a big surplus, and the taxman finds it's practically impossible to understand despite the explanations on why a not-for-profit entity has surplus and is seeking for a tax exemption. So the disadvantages will be to convince taxmen, I don't know, maybe in Uganda, I will speak for Uganda, is if you don't do a deferral model on whether you will be able to get those nice exemptions, which are important for NPOs. That's one, and then probably off-cuff for me. Really, if you don't have any conditions and you recognize and you defer this really revenue, I don't know whether you meet the basic definition of reliability from an accounting perspective. So those are the two comments I would say.
Thank you, Kenneth. That's useful contextual information, I think, for the Secretariat. Jenny.
Yeah, so the issue with a lot of this, and I can understand the issues with the deferred revenue model, but having done the UK SORP, where you have to recognise it based on milestones and restrictions, etc., there's a number of things that happen. Is if you get a very large grant that has got no conditions attached to it and you recognise it up front, that year you have a huge surplus. The following year, when you actually then go to spend all of it, you end up with a deficit. And if you've got very large grants like that, overall you end up with a deficit across your whole P&L, and then you get into trouble with suppliers. So suppliers get hold of your accounts and then say, well, you're not worthy of it. And many times we've had to go and get our parent company to guarantee a supplier contract, to even be able to let that contract. So we've had lots of trouble with that. We've also had trouble when we're talking with potential partners and they look at our accounts and then they say, actually, you're in deficit. Why do we want to do it? Why do we want to go into partnership with you? Because people just don't understand that model of recognizing it. The second thing is we almost had to recruit a new accountant to actually go through everything grant by grant and work out whether or not it was milestoned or not, or whether there were conditions. And that was quite difficult too. And then we had the problem, which is even though there were no conditions and our auditors said we have to do it all up front, recognize the revenue, actually halfway through that grant stopped and we had to write all that back again. And it was really, really confusing. And then our board of trustees didn't understand the accounts anyway, because they were saying, well, why have we got a deficit? We've got, then all the rest of it. So I don't think that while there is an issue with the deferred revenue model, actually it does allow a certain level of understandability and also helps with all those issues that I've raised already. So I don't particularly have an answer, but actually have really big problems with some of the other models that are being proposed.
Thanks, Jenny. Corinna.
Jenny actually already listed most of what I wanted to say, because the problem is with this full upfront recognition is that it's not, it reduces the understandability and clarity of your statement. And there is a real risk, especially on the multi-year grants that we received in 1 year, but we expect to implement over several periods, that we might reach period 2 and realize that for whichever reason they're not completed. So it renders very complicated the work of the auditors, of the accountants, and of the readers that are unable to understand. So I would therefore fully support deferrals, but then it needs to be also clearly explained with guidelines. Otherwise, there will be a lot of judgmental decisions made, and then again, it will reduce the comparability. This is not what we're trying to achieve.
Thanks, Corinna. Sam, are you ready to come back and just give Carolyn's views now, and then we've got...
Yes, ready to properly represent her. So regarding deferred revenue, Caroline says, I do not support a matching idea. Strongly recommend tying any deferral to documented expectations or restrictions by donors. And I think what's interesting there is that she's not using the word conditions, she's using the word restrictions. So there is some ambiguity globally around the difference between restrictions and conditions, but she doesn't support general deferral across the board, but she thinks it should be tied to restrictions or conditions.
And then if we turn to David. and then Nigel.
Thank you. So just covering off a few points there. Number one, we have absolutely almost universal support for the matching principle in users in Australia. Number two, just trying to be quick, I guess, is that we have a massive, almost universal concern when we're over-reporting profits as a result of grant income and that kind of income. Number three, we're seeing organisations becoming more and more imaginative with the way they're treating grant income. So it's not unusual to see organisations get money for a building, depreciate that building over 20 years and take that income to book over 20 years as well. And I guess the final point I'd make there is those kinds of activities really reduce the legitimacy of this process in the eyes of the audience. And I think that's a really important issue as well. It's not just about, to my mind, not just about simplicity, but also talking to an audience of non-accountants, then they don't see, in Australia anyway, they don't see that we're doing things that are valuable and useful.
Thanks, David. Nigel.
There is a precedent, of course, for a deferral model in IFRS, particularly associated with buildings. Interestingly, David, deferring it over the life of the building. My only observation would be, if you embrace the deferral model, is to have criteria which are clear and consistent in its use. There is a risk otherwise, as was found in the pioneering research in the 80s in the UK, that people massage the results based on what they'd want. They're bringing the income that they need to, and therefore you don't really know about financial sustainability reserves because it's all effectively concealed. Thanks.
Great. Vargas, just checking with you, is that hand up deliberately? Or?
Yes, yes, briefly, two quick points. My observation is about the stability of financial statements in terms of overestimating or underestimating the liability in the following year. This, however, also it's related to management assumptions in regard of multi-year projects or partial year. As a result, it's highly intensive, highly sensitive to management assumption, and that create many challenges about the credibility of financial statements. That's it.
Great. Thank you. And we've got some really good stuff in the chat here. And I think this is really showing the richness of having the different stakeholder groups in the PAG. You know, so you can imagine from an audit perspective, right? You've got a very different view from if you're a non-profit trying to talk to a lay audience about what a surplus means, for example. So it's interesting just to get that diversity of opinions around this topic.
Tim, can I just jump in and just respond? Nigel's comments were really prescient to me, but we've been doing work in earnings management, and the driver of earnings management and not-for-profits and charities in Australia is their inability or their fear of reporting a profit and the reaction that garners. So to me, this is a really important aspect, an important point that's certainly relevant in my part of the world. Thank you.
Great, thank you. So I think we're going to move on from that. I think the Secretariat's got some rich issues there to dig into, so and they're nodding at me. So question 4, Paul, do you want to quickly set that one up?
Okay, so question 4, looking at an optional donor or statement or project statement. So this would be supplementary statements to meet donors' needs. So it may be on a cash or an accrual basis. One of the comments, while people did support this, was that it may be onerous where donors' reporting and auditing needs differ. So you may have to have a different statement for each different major donor. So what we're looking to do is to explore this with the donor reference group, see if we can develop an additional section that comes up with a sort of optional donor project reporting format. Unlikely that we'll be able to get that ready for the first exposure draft, so it may be later in the process, maybe even a second phase. But if we don't get to the point where we think we can do an additional section, then we would look to produce additional guidance that could be included in the first publication, so that it would give people general advice if they wished to produce these optional statements themselves. So we're looking to see whether the PAG support that approach, whether they're happy with the way we're looking at this.
Great, thanks, Paul. And because of time, I don't really want to spend long on this issue. So perhaps what I want you to is, if anybody really thinks that we must get this in, rather than essentially seeking to develop a proposal around this with the DRG and run the risk of it coming later. If somebody really believes we must, this is a key thing that we need including, this is your time to speak to it, I think. Otherwise, I'm just,
sorry,
yeah,
can I
Jenny.
just have to, it's a quick question. Is the proposal that if somebody has 200 donors, they would produce 200 donor reports as part of their financial statements? Is that what's the proposal? Am I missing the point here?
The proposal is that there would be optional donor statements, so they're not going to be mandatory. You may choose to produce them probably just for your significant donors. So if you've got some NPOs that maybe have 2 or 3 major donors, you may want to produce a donor statement for each of those donors. I wouldn't expect to see anybody producing 200, I wouldn't think, Karen. But it would be optional. We're not proposing to make this mandatory at all anyhow. It's we're looking to see if we can find a statement that will meet the needs of donors. But I think the aim would be to produce something, if possible, that would cut down the need for separate financial statements. So where major donors ask for specific returns in a specific format, often audited, then I think we're looking to see if we can find a format that would meet all of those needs to simplify that reporting. But we're not proposing anything that would be mandatory.
Thanks, Paul. Karen, you've got your hand up. I'm sure it's to clarify something.
Yeah, no, just to add to that. I mean, I think one of the principles that we're following here is to be proportionate in terms of the guidance that we put there. So we don't want to create huge additional burdens. And in terms of a statement, I think a lot of that depends on where we get with the donor reference group. If there are 200 donors and a common statement meets all of their needs, it may be replacing one set of work with another, and that may be advantageous. Whether they're all published or not is another matter. But Paul's absolutely right. We would be looking at putting this in as an optional thing. So we're looking at it as a tool to help preparers of accounts that they can use to be transparent about the key sources of funding that they've got and how those are being spent. So we've got to get that balance right, and we really recognise that.
Great. Umu, then
Yes.
David.
Yeah, just 2 seconds. Just to say that I agree with the optional for donor reporting, and in the case that question somebody asked about, like if you have 200 donors, what do you do? And just to say that the NPO give to the donors whatever they agreed in signing through the grant, whatever, or through the financial agreement. So I mean, it's a power of negotiation when this is done. This IFR for NPO, that these are the agreed financial statements for everybody, and it's a power of negotiation to say, okay, I will give you this as a report, or if the donor says, oh no, you have to add this, that will be, I mean, a bilateral agreement between the NPO and the donor.
David, if I can ask you to be brief as you can.
Just very quickly, our experience here has been that with these kind of acquittal statements, we go from talking about mission, which we talked about right at the start of this discussion, and end up talking just purely about income and expenditure from the donor or the government's perspective. And it really takes you off point in terms of mission, and that, I think that's a real risk.
Baggers, then Dorothea.
Okay, quickly, yes, I think have an alternative or non-mandatory statement is good, but once it's added, it should be reconciled with statement of activities. Look like the cash apps is exactly. I think this is my input.
Thanks, Dorothea.
Sure, very quickly, the advantage is that donors could be channeled into looking at a standard schedule of expenditures for project reporting. And just adding on to Karen's good comments, again, the vision to get donors to look at this, to collaborate with the donors, and it has a huge potential to do good in the donor world. Over.
Jenny, you can have a second word.
Yes, I am. I'm just going to really endorse that with Dorothea, is that actually getting the donors to agree to a single format part of this process should be everybody's hero. So please get on with it, but don't make it mandatory to include all 200 in the accounts. That would be my thing.
Great. So on that note, I'm going to leave that on. I'm glad to say that Dorothea is part of the donor reference group and can carry that torch into that conversation when we have it. So thank you very much for all of that input around the financial statements presentation. So now I invite Sarah to come in and talk about, I've forgotten the topic, but basically control, reporting entity and control. Thank you, Sarah.
All right, thanks, Tim. Thanks for that. So very quickly, because we have very little time. My name's Sarah Sheen and I work for CIP for Policy and Technical Directorate and specialise in standard setting. I've worked on all the public benefit entity SORPs in the UK. In terms of the reporting entity, what the report sets out are the results of the consultation paper. I won't go into that in too much detail, but those are in the annex. Basically, the respondents agreed with the description, the alternatives, and the advantages and disadvantages. As I'm sure PAG members will remember, the consultation paper set out that there were varying structures which gave problems for reporting entities and how we should report reporting entities. And so our guidance is focusing on different types of operational structure, and we're looking at things like subscription services. We've addressed the issue of branches, and I think that's covered off well in terms of lots of different guidance out there. Affiliated membership and entities that are established, for example, for fundraising purposes, or where there are risks that want to be managed separately, financial risks that are managed separately. So we're wondering whether there were any other specific examples that we might have missed from the list in the paper, and what were the issues that, the issues very particularly that practitioners would want guidance on in identifying the reporting structures. And I thought I'd stop there, Tim, if that's all right, and we can go on to the second question later.
Great, yeah. So, David.
The only comment I've got in relation to that is the instance where a philanthropist appears to control the charitable entity. So in Australia and other countries, I know philanthropy organisations are charities the same as the charity that they're funding. And there is, I think, real evidence of control in terms of the kinds of checklists you run through, real evidence that those philanthropists control the charity. And so I think there needs to be some express exemptions, for want of a better phrase, that say these situations aren't considered to be controlled for the purposes of this reporting process.
Okay, that's really useful.
Great, so I'm not seeing any other hands, and if anything occurs to people can pop it in the email after the meeting about the potential.
Would it be okay if I chased up with those specific examples with David at some point? That's okay.
Yeah, great. So Sarah, turn us on to question 2.
As David mentioned, control, there were 2 alternatives in the consultation paper, one based on IFRS 10, which is the principle-based definition of control. It's principles-based, but probably more complex in terms of the judgments that need to be made, or the IFRS for SME's definition of control based on controlling the financial and operating policies of the entity. We also took this to the focus group, where opinions were divided on both the 2 options, very plainly divided. In the consultation paper, option 2, the more pragmatic approach, was favoured. And so what we would like PAG's views on is if the pragmatic approach is easier and more practical, are you in favour of that? And what are the practical issues that demonstrate, because we haven't really got underneath why it's so much easier, what the practical pragmatic issues are. So it'd be really useful to understand that. And just to add to that lovely picture, IFRS for SME is going through its comprehensive review, and it tentatively has made the decision that it is going for the IFRS 10 definition of control. So there is a risk at the same time that extant standards won't have the IFRS for SME's more pragmatic definition. So I don't know whether that changes everybody's equation in that. It probably kept, in the focus group, it probably didn't make that much of a difference, I think, but that the focus group is more evenly based on the consultation responses, which were in favor of the IFRS definition. So I would really welcome comments on what approach you think would be best, and particularly if you favor the pragmatic approach, why you would do that, and what are the disadvantages and advantages of that practical approach. That's what we're trying to get underneath or into. Please.
Great. Nigel, if you could get us started on this.
I just think the pragmatic approach offers a few things. One is familiarity. In not-for-profit sector, those that have been consolidating will have been applying that methodology onto their various frameworks if they have one. Secondly, that pragmatic approach enables not-for-profits to define the nature of control in contextual way which makes sense for not-for-profits. I think IFRS 10 is not designed, and the ISB are very clear, it's not designed for not-for-profits, their standard framework. And it looks about power and variable returns, which is easy to do if it's cash flows going to dividend streams to shareholders and providers of capital, and power in terms of voting rights. So even if you embraced IFRS 10, of itself, it doesn't actually get you very far, because you have to then interpret all of these terms and applications for different contexts where power perhaps a different expression. So I think IFRS 10 has its problems. The advantage of alignment is that those embracing for-profit standards see you adopting the same in not-for-profits. So not-for-profits are very similar, perhaps they're the same as for-profits. I think there's a danger in harmonizing. So my encouragement is that the approach taken is appropriate for the sector and designed for the sector. And if that leads to a different solution, then I think that's probably the right path. Thanks.
Thank you.
Sam.
Yeah, my thinking on this has really been morphing over the many months we've looked at this, because it's been such a head scratcher. But what has occurred to me listening to what's been said is that the reason why this is so important is about, is this entity really independent? Is it acting by itself? Or is there somebody behind it pulling the strings? Whether that results in consolidation of the numbers or just disclosure, I think in terms of for the readers, it's probably more just about knowing who is controlling it rather than what the numbers added together look like. But the risk of having something principles-based, the person who's, in this instance, the person who's controlling is more likely to not want anybody to know that they're controlling, which I think is quite a complicated dynamic on it, in which case a pragmatic lines tick box approach is harder to wriggle out of. So I don't know, there are lots of just angles on it, but I do think that pragmatic would be quicker and easier to apply and harder for people to manipulate. And if the implication of crossing that line is not a huge cost of some sort of accounting burden, but it's disclosure, then there might be less pushback to falling one side of the line or the other. That's my thought.
David?
Yeah, all of those comments make sense. There's a, I like the pragmatic side as well, with the idea that there might be some express exceptions as well. In my experience, there's a considerable political issue here when it comes to churches and the economic entity, the extent to which the economic entity is represented by the various subsidiary churches. And we know different churches organise in different ways and so on. But there is a political element to this that lends itself to me to say that we don't want to give many options. We want to have a very clear understanding of what the responsibilities are with respect to consolidation and why those responsibilities are important in this sector.
Thank you, David. Any further inputs on this?
Would it be possible, Tim, if they put in the chat, if members put in the chat whether they preferred alternative 1, IFRS 10, or alternative 2, the pragmatic approach, it would be useful just to test the water on that, if that would be okay.
Yeah, so I've already caught that. So please use the chat to either signal if you prefer the IFRS 10 approach, or secondly, a more pragmatic. And while you're doing, I mean, I briefly step out of chair mode for a second. Or, I mean, one of the things that I was struck by what Nigel said, and I think one of the things that's very much a characteristic of the non-profit sector is that it's a lot about collaboration and kind of, you know, lots and lots of different ways of collaborating with other entities. That's a sort of special sauce for the non-profit sector, and it's very hard to apply things that are very much about control and the extraction of financial resources, rules based around that, to the kind of many varieties of collaboration and kind of mutual joint venturing that go on in the non-profit sector.
Brilliant, thank you, Tim, and thank you all for your votes. Well, it's not voting, but thank you all for your comments in the chat. Thank you.
Good. So we've reached the end of the formal papers section. So what we wanted to do finally is just turn to Sam before we finish, and more to make you aware really of how the donor reference group is still in its early development as a new group within the overall IFR for MPO family of groups. So Sam, if you could explain kind of that, and we've also got Dorothea, who's a member, who can perhaps give her reflections.
Absolutely. So the donor reference group was set up as a result of PAG kind of requesting we need more input from a donor group. Specifically, there was a meeting in October that specifically looked at the question of donors as users of general purpose accounts, and you've had the report there. We really wanted to have an opportunity to bring that back to the PAG in case there were any comments or reflections from that. In January, they discussed accrual-based versus cash-based needs of donors. We don't have the write-up of that yet, but that is coming. It's taken a while to get a report that everybody's happy with. So yeah, I really wanted to open the floor in terms of responses or reactions to that DRG paper on donors, the way that donors use general purpose financial reports.
And Dorothea, if you've got any reflections on how that group, I know you couldn't make the last meeting, but the first meeting you were at, it's great just to share that with PAG members.
Sure, thank you, Tim. Just my overall sense is I think the donor group is much needed. It serves the purpose of us donors coming together and perhaps thinking beyond our donor organization. I think my takeaway is that the more we can collaborate as donors to see the larger picture of the burden that's placed on recipients and all the donor requirements placed on them, I think the donor group could come away with the importance of what this project is doing. There's the great ability as accountants to come together and have a global nonprofit set of accounting guidance that donors could parse out what they need. I don't think the donor group perhaps sees that full vision yet. I welcome all the meetings we have and in the future to continue with that, because I think it's much needed in this realm to complement the good work that's being done. So I just offer that, and again, throwing my hat in for any efforts with the donor group. Over.
Thank you, Dorothea, and thank you for your leadership on that. So I think David, then Jenny.
I need to say that there's a real issue around the definition of users in the context of donors and the ability to command the production of financial information. Our research shows that philanthropists and donors in Australia are really focused on the financial reports to triage the opportunities for investment, not necessarily to then go on and use those more substantive decision making or reporting issues. So I just wanted to say perhaps there's some discussion around the user's definition that needs to be thought through.
Thanks, David. Jenny.
You're on mute.
I know, I'm talking to myself again, sorry. I was struck in my report, just one of the sentences in there about members emphasise the need for information regarding currency and exchange rates and financial reportings. And I just wondered whether or not that highlighted one of the issues we've got with donors, is why do they need the information regarding currency and exchange rates? They should agree to one way of treating foreign currency and exchange rates and then just believe the accounts and the auditing. And I think
if I can clarify what they meant. So my understanding from the meeting was that sometimes you read a set of financial statements and it doesn't say which currency it's presented in.
Oh, so they just want to
having yeah, exactly. A symbol, is this thousands of Uganda shillings or is this dollars? You know, what are we looking at here? And then the other one was which rate have they used at the year end for translating to key currencies that are relevant to them, so that when they're reading statements in a foreign currency, they can translate it into something that corresponds to the numbers that they know. So it was just a kind of readability and understandability, that comment, rather than that conversation wasn't about specifics on grants or anything like that, which will be a conversation for another day.
That's why I think the standard can actually really help by putting in very clearly how you should do your translations, etc. Then the donors won't need to know the specifics about it at all. And we get that a lot. We get told, as a recipient of grants, we get told how to do our foreign currency, which causes so many problems. I mean, we have one donor, which is a large donor, but they tell us that when we report, we've got to use the average of the past 3 months daily foreign currency rate, even if we spent everything on the 30th of the last month. And so therefore we end up with all sorts of crazy numbers that come into our accounts and gains and losses, etc. So I think, you know, being able to get a common agreement of how we should manage foreign currency and foreign currencies as the commercial sector has. You know, the commercial sector is very clear how you manage that. So that could come into the standard. Then I think it would take away a lot of the worries that the funders have.
Thanks, Jenny. And that's definitely, I mean, obviously that, as you remember from the consultation phase, this issue of how foreign exchange relates to donors, that was one of the new issues that's kind of in going forward. And I'm sure it's going to be a conversation that needs to have significant airtime in the DRG as well. So I think it's a really important that we've created the DRG. Great. So I think we've exhausted you. That was quite a well done, everybody. We managed to provide an awful lot of input across 3 great papers. So thank you very much to the Secretariat team for producing those and to setting up the conversation as effectively as you did. I hope you got a feel of what I said now at the opening, that we've got a lot of work to do as the PAG. And so when what you'll be finding as we send out the papers each time going on from here is we'll try and send them out a little bit earlier than we did in the previous years, if at all possible. Sometimes that's really hard on the team that are doing a lot of drafting, and drafts go back and forth, but that will be our aim. And I really encourage you to have as much of the conversation as we can. Use email a bit for some of that conversation, so that we can be coming into these meetings where we already, if you like, know where the hottest topics are. And we can really use this time when we're together to explore those hot topics and to build on each other's understanding and points. But I really thank you for today. We've got a really rich set of feedback to take into the technical advisory group when it looks at these very same papers. And we'll be keeping you up to date with the new members as they're recruited, Sam, won't we? Looks like Sam's frozen. Karen, you're speaking. but
I am
muted.
sorry. I thought I'd hit the mute button, but I hadn't. Sorry, apologies for that. Whilst Sam is frozen in time, I think one of the things that we wanted to cover as well, I think as we go forward, we do want to make, as Tim says, the content of these discussions very specific on questions that we want to raise. We recognise there is a lot of work going forward, and so we may request going forward that we have a 2-hour slot for these meetings. If we don't need all the time, I'm sure you'll be very grateful to get time back in your diaries, but just to make sure that we've got sufficient time for discussion. And I think today has kind of really illustrated how rich and diverse the views are, and that is incredibly valuable for us in taking forward the drafting. So we do appreciate the contributions that you're making. I just wanted to make a plea as well. I know in the email that Sam sent out, she asked you to think about important numbers from an NPO's perspective. I know I think Umu covered that off very early on, but we are interested as we take this forward about what do you think matters. And we've talked a bit today about profit and loss and surplus and deficit and the importance that has. There may be other numbers that mitigate some of the perceptions around that you think equally are important. I think Umu mentioned reserves. Would really be good to get your thoughts on that. Perhaps just email thoughts outside of this meeting, but I suspect it's going to be a topic that we return to down the track. But I just wanted to say thank you very much, everyone, today for your contributions. It's been a really rich discussion and very much appreciated. I can see my colleagues all nodding, so that's really good. Thank you.
Great. So with that, thanks so much for coming, and see you at the next PAG meeting.
Thank you.
Thank you for the
Thanks
opportunity.
very much,
Goodbye.
everyone.
Thank you.
Thanks. Goodbye.
Everyone.
Bye.